what is different this time is that you have a group of people who are challenging the commercial banks, who are standing for delivery in the face of naked shorting. The commercial banks have always been able to short the silver and gold market to create an environment that they wanted to create through bullying and manipulating of price by selling or buying so much that the opposite end would give and the price would move in either direction to break the speculators. Well, now the others say, okay, we don't care. Go ahead and short it. Drive it down as much as you want. We are standing for delivery. And so what is different this time is that in every particular delivery month we've seen in 2020, we're seeing as much gold and silver taken off of the exchange as we typically see in a year. And so what you are seeing here is, in my opinion, a constant theme starting in 2017, and that is massive acquisition by the people in the know and pulling it out of harm's way. So you have a central theme where it's about removal of counterparty risk, possession and acquisition. This is all being done by the big money right in front of us. And the big money, according to the little man rule, I've talked about that before, the little man rule was the page 1 of the Series 7 book when I became a stockbroker. I'll never forget it. Page 1, just a little paragraph titled The Little Man Rule. Little man never wins, it says. They always move after the big man has positioned his or herself. So that's the bottom line here. The big money is showing a pattern of acquisition and removal of counterparty risk. And these things are happening as gold has been reclassified as an ultimate form of collateral, a riskless asset. It's just too convenient to not notice. So to me, that's the big change, Dunnigan. It is this year more than any I've ever seen in 30 years.
Welcome back to Liberty and Finance. We have a special edition this year, the end of year 2020. We'll call this 2020 Hindsight, and a 2021 preview with Miles Franklin CEO Andy Schectman. We're taping this Friday, December 18th, 2020. Andy, thanks for coming back on again.
Absolutely. Dunnigan, thank you for having me.
So this is different from our weekly market updates where we just do a quick hit on what's going on right now this week. We want to take a broader view here and give some perspective from your position inside the precious metals retail industry. You've spoken with us at some very climatic points quarter by quarter throughout the year about the internals of what's going on from mining to minting to refining and everything in between, and retailing in the supply chain that's been fractured, premiums going up and down, spot going up and down. As you look back over the year 2020, what are the key takeaways, the key themes that come to mind for you? Lessons learned or old lessons reinforced that you think everybody should keep in perspective about what happened this year in the metals?
Absolutely. I think it's when you phrase it that way, Dunnigan, it's amazing. There's been so much constant change, and it's amazing that we've covered so many of these topics that, the Chinese have a curse, may you live in interesting times, and why these are anything but dull and complacent. And when you think about that for a minute, all the things that we've seen condensed into a year, it's extraordinary. I guess I could be called redundant or boring. I see a pattern, and I think it's really important. Instead of just talking about what's happened this year, which we will, and what we see coming next year, I just want to try to ingrain a pattern that I've seen now since 2017 that really directs the way that I think and the actions that I take, both personally and professionally. So if you would indulge me for about 2 minutes, I'd like to just take everyone through this path that I've talked about, considerably over the year, but maybe not all at once. And so I go back to 2017, and this is when things really started to crystallize for me. In 2017, when gold was languishing in the light of Bitcoin and the Dow Jones relishing, it was a time that was challenging for precious metals companies. I would argue many of them went bankrupt in 2017. Prior to 2017, and really to this day, other than 2017, people selling represented 1% of what we would do. Literally, 1 out of 100 people would sell always. And I think that's because precious metals inherently are not for speculation. They're made for preservation. And, you look from the year 2000, gold's up eightfold. It does increase your wealth in certain instances, but that's not why I tell people to buy it. I tell people to hold it. It's something of a form of insurance that we hope we never need to use. But if we do, for an opportunity or an emergency, we're glad we have it. So with that being said, most people don't sell. In 2017, 6 or 7 out of every 10 transactions we did were people selling. And a lot of people thought that was the end of gold right then and there, as Bitcoin was taking over, the new gold as it was viewed back then in 2017. And out of nowhere, as all of the central banks were selling their gold along with the public, the German Bundesbank made headlines and said, we want all our gold home by 2020. This is where the theme begins. The German Bundesbank said all of our gold must be sent home from the New York Federal Reserve no later than 2020. Most of us thought, well, why the hell can't they just send it to them all at once?
This weekend, yeah.
To be dragged out over a prolonged period of time, and that has many questions that have never really been answered in and of themselves. In fact, some of the rumors were once those bars were received, they weren't the same bars that were deposited. They were new bars versus old bars, whatever. The bottom line is that it wasn't swiftly done, but it started a daisy chain. In 2018, out of nowhere, the central banks of the West began to, and of the East for that matter, Eastern European central banks, began to massively accumulate gold. And as a group, they bought more gold that year than they did in the 60 years previously combined. And following suit of the German Bundesbank, you had the Bank of Austria, the Dutch National Bank, the Bank of Hungary, the Bank of Poland. All of these banks said, we want our gold home too by 2020. So you see central banks pulling their gold home, and you see the drive by the central banks to accumulate it out of nowhere, massively, over more gold accumulated in 2018 out of nowhere after being net sellers the year before than in the 60 years previously combined. Things are starting to happen at this point that are too hard to ignore. By 2019, those numbers were up 90%. Central banks are massively buying gold here, yet, of course, we don't hear about it anywhere in the mainstream, so no one knows about it, except people listening to you and others like you. In April of that year, as I've mentioned many times on your station, the Bank of International Settlements, the central bank in Basel, Switzerland, reclassified gold as a Tier 1 asset, the biggest event of my career. After it being a Tier 3 asset, where only 50% was calculated on the balance sheet, they now give it a Tier 1 status next to U.S. Treasuries. So not only are the central banks massively accumulating the metal, not only are they requesting it to be sent home from the Bank of England and the New York Fed, they have now reclassified it as a riskless asset, the ultimate form of collateral. Again, no mention on the mainstream about any of this. And it further shines a light upon, the nefarious actions of the people on top, the people who position themselves ahead of everyone else. The little man rule, as it is otherwise known, where the little man always follows the movements of the big player long after the trend has been established. The big player sneaks in under the cover of misdirection when nobody is looking and accumulates it. So 2019, the numbers are way up, 90% above 2018 in acquisition. The central banks reclassify it. Now this trend is really in motion, which brings us to 2020. And 2020, I would say the biggest change in 2020 is what's happened on the COMEX. But before we get there, we see the International Monetary Fund, 190 plus countries that were founded in Bretton Woods, New Hampshire, when the U.S. dollar was anointed world reserve after World War II. They come out and publicly say, we want a new Bretton Woods. What that means is we want a new dollar system. We want a new system. So 190 countries from around the world say, well, it's not working the way that it is now. We want something new. Now, that was a big event. How many people read that in their local newspaper? How many people saw that on the evening news or on 60 Minutes? Or you didn't. Here again, following a theme of misinformation or lack of information altogether, along with big moves, maybe historically big moves being made right out from underneath us, and the public at large has no knowledge of it whatsoever. And then we look at 2020, the most startling event has been what's happened on the COMEX market. And I've talked about this a lot too, but I would like to extend the theme. Here we have an environment where typically you have the commercial banks on one end of a trade on the COMEX market and the specs on the other end. And the specs are hedge funds typically. And normally they take opposite sides of each other. If the specs go long, the commercials go short and vice versa. And on the COMEX market, my whole career, which goes back to basically 1990, no one ever stood for delivery. Rarely does anyone stand for delivery. The COMEX market is used for some to speculate as a casino and others like a gold company to hedge exposure to inventory. In other words, if we have 1,000 ounces in physical of gold in our warehouse, we sell 1,000 ounces on paper, and that way they move independently of one another, but exactly opposite. And so we're always market neutral with our inventory. We're not speculating with our business. So it's used for hedging purposes, but never to take delivery. Well, this year that all changed. And that really is to me, the difference in 2020. You have the rise of a subset of traders that are known as the others. That's how they are listed on the Commitment of Traders report that is published by the Commodity Exchange. These others we believe to be family offices and sovereign wealth funds and very, very, very wealthy in the know people. And who do they know? They probably know the people that are making the rules, since they are dealing in enormous amounts of money. This year alone, over 313 million ounces of silver were pulled off of the COMEX exchange. I'm not certain of the total number of gold ounces that were pulled off, but it's an extraordinary amount. In other words, what is different this time is that you have a group of people who are challenging the commercial banks, who are standing for delivery in the face of naked shorting. The commercial banks have always been able to short the silver and gold market to create an environment that they wanted to create through bullying and manipulating of price by selling or buying so much that the opposite end would give and the price would move in either direction to break the speculators. Well, now the others say, okay, we don't care. Go ahead and short it. Drive it down as much as you want. We are standing for delivery. And so what is different this time is that in every particular delivery month we've seen in 2020, we're seeing as much gold and silver taken off of the exchange as we typically see in a year. And so what you are seeing here is, in my opinion, a constant theme starting in 2017, and that is massive acquisition by the people in the know and pulling it out of harm's way. So you have a central theme where it's about removal of counterparty risk, possession, and acquisition. This is all being done by the big money right in front of us. And the big money, according to the little man rule, I've talked about that before, the little man rule was the page 1 of the Series 7 book when I became a stockbroker. I'll never forget it because I had got my license after I'd been in the precious metals business for 10 years. So I was already aware of the other story. And when I got to the class, a book this big about licensing to become a stockbroker, page 1, just a little paragraph titled The Little Man Rule. Little man never wins, it says. They always move after the big man has positioned his or herself. So that's the bottom line here. The big money is showing a pattern of acquisition and removal of counterparty risk. And these things are happening as gold has been reclassified as an ultimate form of collateral, a riskless asset. It's just too convenient to not notice. So to me, that's the big change, Dunnigan. It is this year more than any I've ever seen in 30 years. It's the pulling off of gold and silver in copious amounts, tremendous amounts, challenging the commercial banks and taking possession off of the exchange, if I had to give one difference. That is it this year. But it all follows a central theme and ends in May of this year with the World Monetary Organization's meeting titled, as we've talked about, the Great Reset. And so it's interesting to know, you wonder how they knew to call it the Great Reset a year in advance, but suffice it to say, all of these things are in motion, and where it stops and where it ends is anybody's guess. But it seems to me that the big money has got a little bit of an inside playbook as to how things are going to play out, and you can see that by their actions.
We shouldn't leave this year behind without talking about the next level down the food chain. When we did get COVID disruptions, when the stock market swooned, when we saw a scramble for, our phones were ringing off the hook with people trying at that point at the retail level to get their hands on some physical metals. What was the impact on the available supply and that sort of thing across all dealers at that time in the supply chain?
Well, and that's a good question. And I'm going to answer that by saying it wasn't a complete shock to me because I have seen it repetitively in times that were normal. And what you're referring to is how difficult it was to get supply. And if you went back and listened to long before I was doing weekly and daily interviews, those that I did, the speeches that I would do at Sprott in 2016 and 15 and in Vancouver, and all of the public speaking I did centered around one theme, and that was that the market ultimately would define itself by inability to source product. Because for over a decade now, it has been a challenge where, and this is, you're talking selling to the pimple on the elephant. No one was buying it, and yet continually, for a very long period of time, the mints would run out of product. And when I say no one, I mean, look, we were still doing $150, $200 million a year in sales. That's a lot of business, but we were selling to the same group of people. I'd go to the conferences and see the same people year over year over year. There was no expansion into the mainstream. So one of the big differences this year has been the expansion into the mainstream, the awakening of the mainstream. But that all happened at a period of time when all hell was breaking loose, from the no understanding of what we were dealing with, to borders being locked down, to supply chains being broken. But I would like to say that, yes, that was a phenomenon of 2020, but it's been something we've been dealing with for a long time. In fact, over a decade, when the mints typically in November run out of product. They sell out of their allocations from that year, and then there's a dead zone, typically until the beginning of the year, where there is no new product coming out. The mints will issue 2021 in this case, or back then the following year product in January. And there's always a quiet zone where secondary market product is what is being sold. There are no current year products at that point. And that alarmed me, and I would see this repetitively. It all came to a real crystallization to me in 2008, and that was very similar to what we saw this year. And in 2008, the price of gold went from 1,000 to 700, and silver went from 21 to 9 in the summer of 08 in a very quick amount of time. And you don't have to be economists to know that if the price of something falls by 60% and 35% precipitously, quickly, that there can't be much demand for that product if it's just falling in price. People are selling. And that's true on the paper side of things. In the real world, within 1 week of that happening, every major mint in the world was sold out of product, as was every dealer across the globe. Every dealer on the certified exchange had nothing. That's 1,500 companies that comprise this market that we do business with every day on a wholesale level. But the mints around the world, U.S. was shut down 8 times in 08. South Africa ran out of product for the first time in 60 years. Perth Mint in Australia shut down in August, took no new business. And the Canadian and Austrian Mint were working 24 hours a day, 3 8-hour shifts to be 16 weeks back ordered. And you're thinking to yourself, well, if the price is falling this much, how can the world be out of physical supply? And that was what really crystallized my thought about there's something bigger going on here, and it is about misdirection. It is about misdirection for accumulation. You see, I'm going to answer this question in a very roundabout way. It is the last interview of the year. So, look, the Western governments used to manipulate gold for a reason, and that reason was called Gibson's paradox. And Gibson's paradox is the inverse relationship between real interest rates and gold. And so if you manipulate interest rates to create a perception or an illusion of wealth through our 401ks and our home values to keep calm, even though we've outsourced our manufacturing and really our economy shifts from one of production to one of service, but everyone feels wealthy. It's the wealth effect. If you do that, you have to kill the canary, which is rising gold. As supposedly low interest rates, you should have high gold. There's no opportunity cost to buy an investment that pays no coupon or no dividend or no interest. So anyways, the bottom line is that's why they used to manipulate it. But somewhere around 07, 08, when this happened, they shifted from manipulation, I believe, from manipulation to management of perception of strength of the dollar to one of accumulating assets, because they drive down the price that much, and then within a week, everything is gone. I mean, literally gone across the globe, everywhere, nothing to be found. I truly thought we were going out of business because we couldn't get anything. So anyways, we fast forward to 2020. Here we are in March. Silver goes down to 11, 12 bucks an ounce. You can't find anything for 20 bucks. The borders are shut down. The mints and the mines were all shut down because of COVID. Their supply chains are messed up. You couldn't get product, and that, if you did find it, carried delivery delays and massive premiums. But that's where I think we are ultimately going, because when you realize just how much money has been created out there and how thinly traded this market really is, how fragile the supply chain really is, that is why I truly do believe that as you see more and more people wake up to the need to protect themselves, and where can you protect it these days? Some would say Bitcoin. They've been right so far. Will they ultimately be? I don't know. Gold has outlived every world war, every pandemic, the German hyperinflation, the Great Depression, and it still, and silver, have immutable wealth and value. And that's where I'm betting things will ultimately be found in terms of a bastion of safety. And I think that when the world wakes up to that, right now, as Rick Rule often says, 0.5% allocation across the globe to precious metals. What happens if that goes to the 30-year mean of 2.5% and a five-fold increase happens in demand? You will see what we saw in March on steroids. The inability to get product will be accentuated beyond belief. And I think that's true. And I'm not trying to be sensationalist. I honestly believe that will be true because, look, there are 6 major mints in the world: US, Canada, South Africa, Austria, Australia, the UK. The Chinese mint produces virtually nothing, and you have a handful of private mints that produce virtually nothing in the big scheme of things. And when those 6 mints run out of product, as they have shown the overpropensity to do for over a decade, that's it. Because the difference between a gold bull market and every other bull market out there, Dunnigan, is that in every other investment class, we are taught to pare off some of our profit and to play with the house's money. Greed is that driving force. But precious metals are not about greed. And if it is, you're buying the wrong thing. It is not about getting wealthy. It is not about return on your money. It's about return of it. And so when things get scary or the price goes higher, it only reinforces people's concern for jumping into gold and silver to begin with. See, I knew that was going to happen. I knew that things were going to fall apart. I'm not selling my gold and going back into fiat. We should buy some more. And that's how it happens. And so when things get nuts and the mints run out of supply, the secondary market dries up very quickly. And now you have to pay a fortune to pry it out of someone's hands. So I will tell you, I will stick by my guns. I do believe, and we saw it earlier this year. It's interesting to note that we saw like an 11-year low this year and a 7-year high, maybe vice versa, in silver this year. We've seen everything. But I do think when you look at the low of $11.80, you know as well as I do, there's no one around here that could find it for under 18, 19, 20 bucks an ounce. So was it really 11 an ounce or not? But I think you will see a market that will define itself by an inability to source just about anything before it's all said and done, if you see an awakening, a more broadened awakening by the mainstream.
Something you just related in that story about what you observed in the crucible of 2008 that informed you about how to handle what happened this year, because you and your response to the inventory building in the pit of the smackdown and everything that happened this year and the wake of what followed put you in a position that most retailers didn't have. We kept having clients approach us and saying, how come you guys can be selling stuff if everybody else is sold out? So can you talk to us about kind of that painful lesson learned and how you applied it a decade later?
Yeah, well, I owe a debt of gratitude to Chris Martinson from Peak Prosperity. And he's a very smart man. And he was sounding the alarm in December about the ramifications of COVID. He is a pathologist and a heck of an economist, too. And he alerted me to what was coming. And knowing what I knew about supply chains and just about everything that we get in this industry comes from the opposite side of the Atlantic. You have the U.S. and the Canadian mint, and that's it. The rest are all either in Africa or Europe. And so we said we need to load up right now. And so we secured future production. We paid in advance, months in advance, for all of the delivery months with all of the mints so that we would have tremendous amount of inventory. And I believe that that would have happened. Now, it worked out for me at the beginning of the year. It hasn't worked out as great for me at the end of the year. I went into massive inventory leading up into the election as the prices pulled back. And so, I'm right there with everyone else in terms of pain of premium. In other words, we can't hedge our premium exposure. And whatever the premium is, that's a function of supply and demand. And so I buy it at whatever the premium currently is. And if the premium drops, that's my loss. And so bottom line is that I still have great inventory because I bought as much as I possibly can, went deep into my line of credit. And I'll tell you what, I don't think I'll be wrong when it's all said and done, because I think you're already beginning to see premiums tighten back up. There's an article I just saw 2 days ago that all the German retailers are out of product. It's happening again. Now, is this the bottom? Is this the bottom that people are looking for? When people think of a bottom, they think of a market that goes like that or straight down. Maybe it went like this, and maybe it's starting to head back up. I don't know. But I do know that roughly 50% of every market low over the last 20 years in gold happens in January, roughly 50% of the time. So, in other words, January is the low for the year. If that's the case this time, maybe we are bottomed, or maybe we haven't quite bottomed yet, and we're just about to. Either way, I would say that, when you talk about a fragile supply chain, any event that happens again, any event whatsoever, and I think just like that, and regardless of the price, the product disappears. So if you're already seeing it in Europe, dealers running out of product, does that, portray for inability to get product here? You listen to guys like Andrew Maguire and Alistair McLeod and all these guys who are seeing things from Europe, and you're hearing difficulty getting 1,000-ounce bars and kilo bars of silver in Europe. Does that mean it's coming here too? So yeah, I think things are tightening up and will only get more and more difficult, especially if we see an event, again, another lockdown or some event that quickly changes everything. And so it's a lesson to be learned, done again, and that is don't wait for the pullback. Secure your position. Buy on the dips. Don't chase the rallies. And that's the best advice I can give someone who wants to accumulate.
If we could maybe we're going to come back and give some end of year tips, like, for example, how to do a tax swap, how to maintain your privacy. But first, you've talked here quite a bit about what you saw as paper price versus physical price. And we have several questions from viewers that are about that. And if we could just talk briefly about that.
Sure.
Yuli John says, how will gold and silver break free of Fed manipulation as long as the price is set on the Fed-controlled COMEX? I do not see any hope of gold or silver going anywhere significant unless the Fed manipulation ends.
Well, I think the only way to successfully manipulate a market over an extended period of time is to push it in the direction it is going. When the rest of the world is accumulating, and in particular the world's central banks, how long can they hold it down? Maybe the reason they haven't complained, they being the other central banks, about the price being held down is that they have been accumulating it in tandem since 2000 and late 2017, as we talked about. out of nowhere, they start buying it, and then they reclassify it a year and a half later. Could it be that they are misdirecting the public, keeping the rhetoric anti-gold, rarely talking about significant events like Basel III and the reclassification of it as they corner the physical market? And when you see more and more and more action happening on the Shanghai Gold Exchange, they've delivered over 90 times more gold than the U.S. COMEX has over the last couple of years. At some point, when you get to a point where the rest of the world has already accumulated all that they can get, they won't tolerate for manipulation on the downside. They'll let it go up to the upside. They'll let it run higher than people think possible, and they'll make more money on the upside than they did on the down. And so I think that's the important thing here, is that if the world's central banks weren't massively accumulating it, if it wasn't reclassified as the ultimate form of collateral, a riskless investment, I would put more stock in what this gentleman is saying. And it's very frustrating. I understand it. It is very frustrating. But look at the big picture. Why accumulate it? Why reclassify it, if not to reap the benefits? And players at that level, they don't do things in a vacuum just for kicks. They're doing it to reposition ahead of the crowd. It's a ocean liner that's trying to turn here, not a speedboat. And that ocean liner, in order to reposition, takes time and allows the big money to reposition. They are not crowding themselves out of the trade, in other words. But I promise you one thing, there will come a time when they'll let it run, and standing for manipulating the price on COMEX will be rooted out very quickly, and perhaps the COMEX will cease to be the price mechanism, and maybe it moves eastward to the Shanghai Exchange. I don't think it can last.
Related question here from Michael, and this gets back to, I think, what you've been talking about, the big picture over the last several years with all this repatriation and reclassification and all that sort of, and then accumulation by central banks. Michael says, Andy, I saw very recently on another podcast that someone released a story about two politicians mysteriously sold all their stocks right before the March 2020 COVID crash. Similar reports were released following the 9/11 attacks in 2001 regarding several large owners of airline stocks and the insurers of the Twin Towers. My question to you is whether anyone has the ability to monitor the activities of certain high-profile yet concealed individuals to gauge when exactly the next huge sell-off will take place.
You mean like the others on the COMEX?
Maybe.
I mean, aren't they high net worth individuals, billionaires, sovereign wealth funds? Who are they connected to? Why all of a sudden pull it off the market? Why pay, huge amounts to pull this amount off the market? I think that, let me put it to you this way. I think that the insiders, this will always happen. The insiders know what's coming, and they move. In 1933, when gold was confiscated, when Roosevelt confiscated gold, all of the insiders, the wealthy, they got on steamships and they sailed across the Atlantic and brought all their gold coins to the banks of Europe. This was massively, massively common by the big insiders. They knew it was coming. And so I guess we live in a world where that's why they say it's not as much what you know, but who you know. And those people will always trade on that information. And, good luck trying to, look, Martha Stewart went to jail for that, but the people above her can do 1,000 times worse and nothing happens. So I think that's just part of the game and part of the system that we have to live with. And that's why we do what they are doing, not what they are saying. You can see what they're doing. They're telegraphing it. But as we've talked about before, the insiders always leave crumbs along the way. And you can see these crumbs. And that's what I'm trying to show everyone, is the path of crumbs that lead to where we are today and to where we are going. How does it ultimately play out? I don't know. And I think the insiders will always be insiders and will always trade on that inside information, always. And that's just the way that the system is built. I think you could say, well, why weren't the Clintons ever indicted for stuff regarding Whitewater or their foundation? And it seems to be so much information. And I think you get to a certain level where power that comes with it. If you have information and you have power, well, that's just going to always happen. So instead of worrying about it, because it'll probably always be, just beat them at their own game and do what they are doing. Don't listen to what they're saying, and trust your gut. Your gut is your best financial advisor. Your gut sees through the muck. People don't listen to their gut loud enough or intently enough. And so I think you listen to your gut and do what they are doing, not what they are saying.
Before we turn our back on 2020, could you talk to us about any tips for end of year actions that people might want to take care of business before end of year? One of the things I know was tax swaps. You've mentioned it briefly in a couple of times, but people want to understand, especially those who are stinging because they might have purchased silver or gold right, or specifically silver, I guess, right after the 2011 high when it was, higher than $30, $35, $40. If anybody is sitting on a loss, what can they do to grab that tax credit for their loss right now?
Sure. So I want to talk about tax swaps, IRAs, gold to silver swap. I think they're all relevant. The tax swap is interesting. In the tax code, the 30-day wash rule applies to securities. And what that means is if you sell a stock and claim a loss, you're not allowed to buy it or anything similar for 31 days. And the reason is if someone is very, very wealthy and they have some losses that they could cover off of capital gains, nowadays with free trades on just about every online platform, you could sell a stock, book a loss to cover your capital gains, offset them, and then buy it right back for free. Well, that doesn't work with the IRS. They don't like that. They say you got to wait 31 days and let the market risk take over. So then you could buy it back. With commodities, that doesn't apply. So what someone can do, as long as custody changes hands, they have to actually ship it to us. Or if it's in a storage facility, we move it to our account, close that account, open a new one, and send it back. But it allows someone to sell their metals at a loss. If they bought gold at 2,100 or 2,000 and they want to book that loss, or they bought silver at 35 or 40 or 45 and want to book that loss, but don't want to relinquish the metal, they send it into us, we receive it. We charge them 1% on either side. On large orders, it could be smaller, but between 1% and 2% round trip, and they book that loss and buy it right back. It's legal. The 30-day wash rule applies to securities only, does not apply to commodities. So it's a way to sell metals, book a loss, buy them back, and establish a new cost basis. It's a wonderful way of doing that. It is a legal loophole. And I don't know how long it'll be there, but it is legal, and it is something that we have run by some of the largest accounting firms in the United States. But it's always good to ask your accountant his or her opinion. The other is the silver to gold swap. Look, we did an interview with Keith Newmeyer, your son Elijah and I, and Keith said that what's coming out of the ground is 8-to-1 throughout the entire world. In other words, 8 ounces of silver for every 1 ounce of gold. Yet right now the ratio is about 78-to-1. That is historically disjointed. That is upside down. It is an anomaly. And I said to Keith, well, how long do you think it can stay this way? So, well, how long do you think we can pull something out of the ground at 8-to-1 and sell it for 10 times less in terms of its ratio? It will regress to its natural mean. I am convinced of that. And so, yeah, I think that doesn't last very long either. I look at it as an opportunity. In fact, silver to me is the buying opportunity of a generation. And so at a 78-to-1 ratio, roughly, people trading their gold for silver with the anticipation of buying it back, the gold back once it hits 40 or 35, or what if it gets to 8-to-1, like Keith's saying is coming out of the ground? That's almost a 10 times return. In other words, you trade $100,000 worth of gold into $100,000 worth of silver at 78-to-1. If it goes to 8-to-1, that $100,000 worth of gold that you would switch back into would be like $1 million worth of gold. And so the point of it is that this is a rare opportunity of trading silver to gold at an anomaly ratio between the two, and especially when you see a ratio of 8-to-1, the mining ratio being so far away from the price ratio. And then the last one is the IRAs. And the precious metals IRA is a great way to reduce your tax burden if you open up an IRA, and to make a bigger splash in the gold pool if you have an existing IRA and want to transfer it to a precious metals IRA, with the benefit, the real distribution benefit being the ability to take in-kind distributions. When you start taking distributions at 59.5, you're able to. You're mandated to, I think they just raised it to like 72. It used to be 70 and a half. Those are called required minimum distributions. But anytime in that period, you can pull back your gold in lieu of cash. Heck, you could be under 59 and a half and say, I want all my gold liquidated. You'd pay penalty, 10% plus income tax. The point of it is that the ability to take possession of your metal at any time is really the golden distribution bonus benefit of a precious metals IRA, and the ability to do a gold to silver swap back and forth without facing any taxable implications is also really cool. Or palladium to platinum, same type of deal where palladium is just so far out of whack in its relation to platinum and gold and silver. There's lots of swapping things that we could do to strengthen someone's portfolio for going into 2021. And the last piece about the IRAs is the consideration of changing to a Roth IRA. Because if you have a Roth IRA now and want to put it in precious metals, you pay your taxes now. That hurts. Get it? The whole concept of an IRA is to pay it out over time as you take distributions. So the Roth says, well, give it to us all now, and then any gain that you have going forward will be tax-free. So if you really think prices are going higher, let's say at silver, some people say 100, 200. Quite frankly, I don't think that's outlandish. I really don't. We can talk about that sometime too, but I don't think it's outlandish. So you pay the taxes, you convert to a Roth, you put it all in silver, have it held at a depository and let it run. And at any point you decide to take possession of it, take it without any taxes. Might not be a bad idea, because it's pretty hard to believe that a democratic regime, should we see one, probably won't raise taxes. I think they will, and I think you'll see prices go higher. So converting to a Roth into a precious metals IRA where you can do the gold to silver swap and all that kind of stuff, probably a real good idea also.
Also, before we turn the page into 2021, I wanted to ask a question that many clients who have called me are asking, so we'll just go ahead and address it. They say, why doesn't Miles Franklin allow me to order online and put their prices online? So if you could talk to us specifically about the importance of privacy, why we don't have an online store that other dealers offer.
We've talked about this a lot, and I can see why some people think it's being less than genuine and not being transparent. Look, I've said on the show here forever that I will be as competitive as anybody. And I put our track record and our reputation up with anyone, aside from the fact we're licensed and bonded, the only state in the country, aside from the fact that we don't get customer complaints and have an A+ rating, and one of only 27 companies approved by the U.S. Mint. Our reputation and our accreditation lets us stand on our own merits. But to answer your question, number one, there's way too much fraud. And I was losing sleep at night. And it took all the enjoyment out of owning a precious metals company with credit card fraud. And then moving to mortgage fraud, people sending us stolen identities, selling people's house through a title company, a wire for $600,000 that was fraudulent. It just became too much for me to deal with. And quite frankly, I give all of the online companies credit. I don't know how they deal with it. I guarantee you they are spending an awful lot of time in fraud mitigation, in chargebacks, in all of these things. And it's repetitive. And without mentioning names, one of the biggest, most respected online companies in the United States was hacked this year in February. They didn't know about it till July, didn't tell the public till November. This is a company with an incredible website and a great reputation. When another company, one of the big ones, 2 years ago was hacked, and their clients received ransom letters saying either give me 1 Bitcoin or I'm going to publish your name, your address, and your order history on the dark web. I mean, this stuff's real. And I just got to the point where I said, you know what, I'll lose some business. I get it. But it wasn't worth it to me. And you know what? In the end, in both instances, it wasn't worth it to the end user either, because their identity was stolen. No one wins. And the proliferation of very sophisticated, in many cases, state-sponsored hacking and identity theft is real. And, a commercial bank who has an IT department with, a 7-figure budget can do what they can to mitigate that. I don't want to do that. And I would rather do things the old-fashioned way. And quite frankly, in a world of privacy gone by, I think doing things old school, done again, ain't such a bad thing. Relationships ain't such a bad thing. And I get it. I watch my young kids. They don't know what a phone call is anymore. All they do is text and Snapchat and TikTok and this and that. And I get it. But until I am forced to, with no other avenue, I will always be old school. And in the end, I think precious metals belong old school. They're 6,000-year-old history wealth. And it just, for me, belongs offline. And I just don't want to deal with the fraud. But in terms of pricing, I'll never disappoint. If someone has enough effort or takes upon enough effort, send us an email or a phone call. We'll make it worth their while. And the same, I know, goes for you, too. And I don't mean to beat around the bush. I hope I'm coming across as being genuine. And the bottom line is I just couldn't take the stress anymore of the constant identity theft and hacking. And it was relentless. And I think it'll be a trend that will continue. And I figure our money is better spent in offering people good prices and paying my brokers to spend time to be accountable, to be accessible, and to be there when people need them. Because you never realize how important a relationship is until there's a problem, until you need someone. Then try to get a hold of someone at an online company in any asset class, in any retail situation. Try getting a hold of Nordstrom's online when you order something versus going into the store. It's the same thing. It's just about customer service. It's about lack of identity theft. It's about lack of liability with fraud, and it's ever increasing. So for the time being anyway, this is the way that it'll be. We are building a new website. We will have a better indication of pricing, but we just choose not to be that model at this time.
Yeah, and not having customers' purchase history accessible to the web, because that's the risk you talk about. Is if it's accessible and convenient, that means it's also accessible to bad guys as well, or can be.
Yeah.
If we could turn the page with you to 2021 and look ahead, sounds like this big drama theme you've seen playing out, first of all, over decades and now over years. Where do you see that taking us in 2021?
Well, I think it's interesting. We don't see any talk in the mainstream media about gold and silver. Gold was up this year, what was it, like 30 some percent? In fact, let me see if 25% gold was up 20, and silver was up 45%, thereabouts, really close to those numbers. So, the numbers were really good. They're not rock star like everyone thinks investments are, where they go up 200% in a month and that kind of stuff, but slow, steady appreciation. It's the tortoise, not the hare. Remember, in 2000 or thereabouts, gold was $250, so it's up almost ninefold, 8.5-fold, and it's outperformed the S&P 500 over that same period of time, which is up about fivefold. So that slow, steady appreciation is continuing. But I find it interesting that we're even seeing, negative talk out of the media that Bitcoin will replace gold and it's gold 2.0. And I don't think it is. In fact, I'll tell you that most people who own gold will never trade it for Bitcoin. It doesn't mean that there isn't a push in a younger generation or people that are looking for alternatives that are looking to Bitcoin that would never look at gold or don't look at gold. But, I think the misinformation or the lack of information altogether about gold is telling when we follow the string of events that have happened over the last 5 years, where the big money is doing all they can to misdirect, both in rhetoric and in price, so that they can continue to accumulate it and pull it home. They don't want to be throwing off their trade by touting the merits of owning precious metals. But look, we see gold up 25%, silver up almost 50%. And I think 2021 is going to be a year of unlimited monetary inflation. With Janet Yellen now running the Treasury, and she's no stranger to quantitative easing and money creation. I think that is what we will see. We will see the seeds of inflation. I think it's coming. That's what the Federal Reserve truly wants. You're beginning to see the Bloomberg Commodity Index move up. You're beginning to see the soft commodities like the grains and wheats move up. Copper is moving up. Platinum's even moving up. You're seeing oil move up. You're beginning to see commodities move up, which really help ignite the inflation fuse. And look, as we talked about a couple of weeks ago, 23.6% of all dollars in circulation were created this year. You are seeing a drive towards inflation. We're seeing a stock market that is detached from the economy, one where corporate profits are supposed to be an indication of the health of the economy. That's not the case right now. You see this year a divergence of the greatest divergence between the S&P and gold ever, like 30-some%, where the S&P kept going up and gold hasn't. It's a buying opportunity for precious metals, and quite frankly, I think if the Biden regime does take hold, if it does happen, and right now I find it interesting, the lack of media attention to this too. Like, where are we going to be a month from now? What is going to happen with the transition? Is it going to be challenged? Is it not going to be? What's the deal? But if it does, and then more importantly, if they lose the Senate, and now you see a Green New Deal and a whole different agenda, I think you could see some very, very interesting things. You could see a stock market that sells off because, number one, you have Biden talking about raising corporate taxes and capital gains taxes and stock transfer taxes and all of these things that would make people who have ridden this S&P and Dow Jones bull up to extraordinary heights. And I think even those people, the most ardent stock bulls, have to know that, heck, this doesn't make sense when I'm looking at the economy, when I'm driving downtown and I see everything boarded up and closed up, when I see everything shut down, when I see 35% of all small businesses not able to pay their rent in December, when I see 100,000 of them gone forever, how is it that the stock market can be here? At some point, they have to say, heck, taxes are going to go up. Let's sell and book our profits right now. So you could see a windfall decline in the stock market, even as the Fed is doing all they can to bolster it by supporting it and building their balance sheet. So at the same time, I think you could see silver go to the moon because you have a Green New Deal agenda. This year, the Silver Institute estimates a 330 million ounce shortfall between supply and demand. What does that mean going forward when there is the proliferation of battery-powered vehicles? You're starting to see GM come out with the new Hummer is battery-powered. You're starting to see more and more and more talk about removal of combustible engine vehicles by 2030. So, battery-powered vehicles are here to stay. And so that, along with a push away from fossil fuels. I saw an interesting article today. The title was, is oil the new big tobacco? Is it the pariah? Is it something people are going to stay away from and push towards this clean energy? And if that's the case, you need silver. I mean, in ever increasing supply. In California, they passed a law in 2020. All new construction has to have solar panels as part of it. So these things aren't going away. As is, we are already between a 2 and 350 million ounce per year deficit. What happens when the drive for silver ever increases? Now, take a step back. Could this be why you saw 313 million ounces, massive amounts pulled off of COMEX? I wonder, maybe the insiders know something. Maybe that's why we see record inflows into SLV. I don't know. All I can tell you is that I think silver is the buying opportunity of a generation. It is 50% of its all-time high, which was in 1980, and the world is in massive deficit, and the world is in ever-increasing need for it. And as we've talked about, it's found in nature in a form called epithermal. It's found very close to the surface. So the big supplies, the big deposits were found eons ago, even without sophisticated machinery. And that's why you don't see many new silver companies. There's only a handful of them. And that's why when Keith Neumeyer says it's coming out of the ground at 8-1, but priced at 78-1, when a company like JP Morgan has amassed 1 billion ounces of physical, according to Ted Butler, paid a $920 million fine, but made $1 billion on their precious metals trading desk. I mean, something's wrong here. Bottom line is that I think the big money pulling silver off and massively accumulating it at these ratios, they see the same thing that I see. I think silver into 2021 will be the play of the year. To me, it's the opportunity of a generation. And so I think we see a period of time where look, right now, 65% of the country is living paycheck to paycheck. And does that mean a vaccine will right all of the ills? I don't think so. You know, a lot of these small businesses are spending every last penny they have to hang on. And what happens when they can't hang on any longer? And let's not forget that someone's debt is another person's asset. So every time you see these bankruptcies, someone else is losing. This is a game that is spiraling. And now the Fed's reaction to it is that the only way to keep the ball up in the air is through more and more stimulus or money printing. So you have fewer and fewer people producing things as they go out of business, and a Fed and a government that is hell-bent on stimulus and throwing more money at a problem that is ever increasing. That is the seeds for massive inflation. So I guess in a very roundabout way, I look for high inflation, and I look for silver to be the play of 2021.
Well, Andy, it's been great having you here for this last interview of 2020 and answering viewers' questions, giving us that broad picture of your past experience. We're grateful for your presence here. If people want to follow any of the publications that Miles Franklin puts out, where should they plug in?
They can reach me personally with questions or comments at andy@milesfranklin.com. I will do my very, very best to reply. I am going to try and unplug my brain for a little bit over the holidays, but I have a bad habit of plugging back in every so often, and I think I'll be able to get back to any emails that are sent to me fairly promptly, and always appreciative of them, as I am of my relationship with such a fine individual and classy individual and family like you and yours. I wish you and yours the best of the holidays and a happy, healthy new year, and I look very forward to picking up where we left off in 2021 to see, you know, what's ahead. I think it's going to be a very interesting year, and maybe in some respects even more interesting, if at all possible, if that is even possible, than this year was.
Thank you, Andy. And folks, so that we don't lose track of each other, make sure that you go to libertyandfinance.com, and over on the left-hand margin, put in your name and address, your email address, and sign up for our free, 100% free newsletter. Comes out 3 times a week. You'll get Andy's interviews, all our other guest interviews, descriptions, links, resources, all in there for free. Don't miss out on that. libertyandfinance.com free newsletter. Andy Schectman, CEO of Miles Franklin Precious Metals, thank you for joining us on Liberty and Finance.
Happy holidays to everyone. Thank you, Dunn. Again, look forward to seeing you soon. Be well.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today. To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Dunnigan Kaiser, my phone number, and my associate, Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.